to the last session of this year at Nice Aarohana. We'll be continuing, of course, in the next year. And before we go on with the session and I introduce the speaker, let me take you to a few housekeeping rules. Uh, as you all know that you'd be on mute. There will be a Q&A at the end, but please type your questions as and when they come to you. Don't have to wait till the end in the Q&A box that's at the bottom of your screen. Please keep your questions brief and preferably a question over a comment. If you want to know more about Aarohana or reach out to us, you can write to us at aarohana@niceorg.in and check out the website at niceorg.in/Aarohana. Certificates will be issued at the end of the 3-month program, but you need to have 75% attendance for the same. This session is also being streamed on Facebook, so please ask your family and friends to join in. There are 2 very exciting sessions that we have. We're sharing these session recordings, certain readings that come up on our LinkedIn group. So if you're not a part of it, search for Nice Aarohana and the link is also given here. So please do join. And the sessions will be uploaded on our YouTube channel in a few days from now. So you can always refer it and look back at it whenever you like. Without much ado, let me now introduce Saroja, who's our speaker for the day. Saroja is a founder of Melora, which was an initiative started in 2015. But apart from that, she has a diverse experience of 20 years in consumer goods, markets, retailing, and also she's very she brings an expertise on how to build brands, startups into brands, profitability, all of which she'll be speaking now as well. Comes with a corporate experience as well, so all of that would be integrated in her talk and it wouldn't be just limited to about the journey on Melora. Saroja, welcome, and the stage is yours now. I'll stop sharing my
Thank
screen.
you. Thank you very much, Arunima, and thank you to the Nice Aarohana organization for having me today as a speaker. I'm really excited to be here and talk to all the attendees. Thanks for the kind introduction as well. So today, what I really wanted to talk about to all of you is my entrepreneurial journey, specific focus on my entrepreneurial journey, how to start a company, how to raise funds, and how to actually build a profitable, scalable business that would attract investor interest. So that's really what I wanted to talk about today. Of course, I do want to start with going a little bit more deeper into my background and how it is that my experience in the corporate sector has helped me to start up a company, certainly later in life than for many other entrepreneurs. I should say I'm perhaps one of India's older, entrepreneurs. So I started my career in advertising back in 1991 with Ogilvy, and then I spent a couple of years in Mudra, and then I spent 13 years working for a wonderful company called Titan Industries Limited, which is part of the Tata Group. And I was part of both the initial business building teams of the watch business Titan and subsequently the mega jewelry company Tanishq. I was part of the core leadership team that helped to build Tanishq in India. I used to head most of the core business functions like sales, marketing, created merchandising, supply chain, headed design. So learned a lot in my experience working with Tanishq, and of course, did a lot of acquired a lot of domain knowledge about the jewelry industry in specific. I subsequently moved to the United States to help set up the Tanishq operations over there. We didn't have a business. So I created a blueprint, presented to the board, and also helped set up the first set of pilot stores in Tanishq, USA, in Chicago and New Jersey. And Tanishq was the first consumer company, stroke retail company that launched in the US back in 2007. Came back, took a career sabbatical to as I was busy raising very young kids. I had a toddler and I was about to deliver my second child, so I took a break for about a year, came back to India and went and joined Marico. They had just started the Kaya Skin Clinic business, which was a cosmetic dermatology company. and they were looking for somebody to scale that business. So I spent 2 years heading the business operations in Kaya, and then moved to Bangalore and again took a sabbatical of about a year to spend time with my children. And later on, I joined Dell as the director for retail business for India. So that's in summary about 25 years of work experience, being part of many different kinds of industries, being part of organized retail from its inception in India, and I have helped build very recognizable consumer brands, marquee consumer brands. So been very fortunate at the kind of opportunities that came my way and that I was able to leverage to learn a lot. After spending about 2.5 decades in corporate India, I decided to start my own journey and to start my own company. And in 2014, late 2014, I started creating a business plan for Melora, which is my company. And we are a disruptive fine jewelry company. We operate in jewelry, which is in gold, diamonds, and gemstones, but targeted very specifically towards the younger generation and very contemporary jewelry, because of course, in India we have so many options for traditional jewelry. So it is more affordable, contemporary, and we are like the Zara of the jewelry world. That was the vision with which I started Melora. Of course, I've had an exceptional start. I do recognize that, because on a business plan without with zero revenue streams, with no proof of concept, we were able to raise India's largest seed round, which I believe is still a record of $5 million from a venture capital company based out of Mumbai. And so we started business in 2016. We are about 4.5 years old, and we have seen very strong growth momentum in the last 4.5 years that we've been in business. So if you really think about, the entrepreneurial journey, people say, and it is no exaggeration, that it is very challenging. It is very hard, and you go through a lot of emotional coaster moments. There are ups and downs. While I was very fortunate to be able to raise money from the very first investor to whom I pitched, but subsequently, in the subsequent rounds of fundings, and now we have been through 5 rounds of funding, I have faced rejection a lot. Many times I've been turned down by investors, and every time you hear a no, it really upsets you emotionally. But I have learned to bounce back. I give myself one evening to get over the disappointment, and back on the horse the next day, and again presenting to investors to raise money. So it is a tough journey, and there are so many setbacks. Hiring is challenging. Getting the right team together is challenging. Technological challenges, logistical challenges you might encounter. But at the end of the day, there is deep satisfaction of having created something out of nothing, as most entrepreneurs will tell you. So if I look back, something that has really stayed with me is that I remember when I was part of the Tata Group, and all of us know that the Tata Group really is not very significant in terms of being a great paymaster. And for all the time that I've spent in the Tata Group, I used to really feel that, I'm not earning much. I don't have too much of savings. And what am I really doing in life? Is this the right thing that I should be doing at this stage of my life? Should I not be building a big nest egg for retirement? And thoughts like that used to cross my mind, and I used to just keep going. However, on the balance, I was learning a lot. I was learning how to build businesses, profitable, scalable businesses. I was given tremendous freedom to operate. I rose up the ranks very well. So there were no glass ceilings as such that came my way. So there was that also on the other side for me to consider. But the pay was poor, and I often wondered that peers of mine, other college classmates, etc., were in much better paying jobs and were minting money. And why am I sharing this with you today is because as I look back today, I recognize that all the years of sacrificing on the financial side actually helped me. It helped me in getting the kind of experience. And had it not been for that journey, there was no way that I would have been able to raise India's largest seed round of $5 million. Because the real reason that the investors gave me money was due to my background of having built Tanishq in India, and due to the expectations that, I will build another big brand like Tanishq. So it really is important to recognize that learning is so important at all times, at every age. Every day comes with tremendous amount of learning, if only we have our eyes and ears open, and not to think about money making all the time, because that will follow, right? So it's only now that I recognize that I had not wasted my years, but it was actually very fruitful investment of my time. So that's a very important perspective to keep in mind, how to take learning from all your experiences and how that can really help you in your entrepreneurial journey. Because many times I'm asked by people who are working in jobs that, look, I don't have entrepreneurial background, I'm a first time entrepreneur. Do you think this will come in the way of raising money, or will this impress investors? And I'm here to tell you that absolutely you can. All experiences are worthwhile. Even if you're in a job, you're learning a lot. You're learning how to get along with people. You're learning how to build a team. You're learning how to build a business. And that experience is going to stand you in very good stead when you start your own business. The second, so this is one large message I wanted to leave behind for your consideration. The second one I really want to talk about is that regardless of which industry you're building a business in, regardless of what segment or sector that you want to focus on, one thing that is very, 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 very important is that you really understand the dynamics of your industry at depth. There was no way that I could have raised either the seed round or the successive rounds. Of course, we are a pretty large business now. We are India's fastest growing consumer brand. We have raised money now from international private equity players too. But at all stages, when I have met so many global investors by now, what has really helped me is my very in-depth understanding of the industry in which I operate, which is the jewelry industry, not just in India, but even globally. So reading up a lot, keeping your eyes and ears open, meeting people from the industry, all of these things really help a lot in convincing investors to back your dream and back your vision. So really get into and sink your teeth into understanding the industry in which you're wanting to build a business. The third point that I want to leave behind today with all of you is, uh, you know, have a lot of curiosity for the world around you. Observe people, especially if you are building a consumer company, or even if you're building a B2B company. Curiosity is the most important ingredient, in my opinion, to be a successful entrepreneur, apart from one other ingredient, which I will call resilience or persistence. So, if let me share an example from my own life. When I was working, and I had the opportunity to have an oversight of a conversation between a mother and a daughter, and I was observing this interaction in a traditional jewelry store, and the daughter was very resistant to buying any of the traditional designs that her mother wanted her to buy, because she was a young girl, she was wearing jeans and a t-shirt. And that is when I really felt that there are plenty of young women like this. I started speaking to a lot of young girls, and they all said the jewelry in the market is for aunties and grandmas. It's of a different era. It really doesn't go with my current lifestyle needs at all. And had I not been very observant of that moment of interaction between the mother and the daughter, the idea would not have occurred to me to come up with the brand Melora. So, in general, I have seen and I have learned from some of the biggest industrial leaders in India. I have had the great fortune of working with some of the best people in India. And I have seen that the best leaders are those that have tremendous curiosity for the world around them, are very quick to observe trends, are very quick to catch on to insights, consumer insights. And, so that really, really helps a lot. And it's not a one time thing. It's not just when you start a company, but on an ongoing basis. You have to be constantly talking to consumers personally. It's not something that you delegate to somebody. And you have to build a culture in your company of listening to consumers all the time. I have often been I've often seen that a lot of people are very worried about competition. But I want to tell you that I'm not an entrepreneur like that. I actually don't even think about competition. And I encourage my team not even to bother about competition because they have their own, business plans, business vision, and we don't need to copy anybody. We have to be truly original and innovative. And the only way that you can be is you are better off spending time with your customer than observing what a competitor is doing, because that's just very wasteful use of your time. So that's the third message that I wanted to give you, that have the curiosity, be very observant, talk to a lot of customers, and that's never ever going to be the wrong way of spending your time. Somewhere or the other, all these dots connect up in order to be able to, for you to be able to build business. Finally, I mean, not finally, sorry, my fourth message would be that, entrepreneurship is an act of courage. Every single day, you are taking decisions which have, big risk associated with them. And investors don't give you money so that they can earn the kind of interest that they would have got had they put the money in the bank. No, they are giving you money to make outsized returns on their investment. That is why they're investing in you and your company. So you owe it to investors to be courageous, to be very decisive, to be very bold, and to take big risks. Of course, you have to weigh up the risks that you are making, with data, and beyond that, with your gut and your instinct is very important. And every day that I sit in my chair as the CEO of Melora, I ask myself, I remind myself rather that I am here to make bold and big decisions involving tremendous amount of risk. Because if I am not prepared to risk, I should not even be sitting in this chair of a founder and CEO of a company. So go with data, but finally let your gut prevail. Your instincts will not lead you wrong if you listen to it. So take everybody's views. It's very important that you involve your team, you involve your investors, all stakeholders, but at the end of the day, make your own decisions. So that's the fourth message that I wanted to leave behind. The fifth message that I wanted to leave behind today with all of you is, after every single investor pitch, I sit down quietly by myself, and whether the answer is yes or no, it doesn't matter. I make notes. I make a lot of notes as to how can I improve my pitch for the next investor presentation? How can I make it better? So the feedback that you get, it's great if investors agree to invest in your business, but equally valuable are those investors that say no to investing in your business. And I have hardly encountered an investor that will not give you a complete valid reason, if only you ask for it. And what they share as feedback as to how your business could be better is so valuable. Not only will it help you to run a better business, but you should also incorporate that in your pitch presentation to your next investor, so that you're constantly working to improve your pitch. So please make notes after every investor meet and reflect on it and improve your pitch presentation, and as relevant, use that feedback. I think a sense of humility when you speak to investors, or in general when you speak to anybody, is always very, very, welcome and admirable. The next point that I, did want to make is that, build a strong team. I think a lot of people say this, and I, especially in my particular case, I am a single founder. Of course, there are many businesses with multiple co-founders. There are positives and negatives. There are pros and cons to everything, of course. But in my particular case, I'm a single founder. And so it was very important for me right from day one to build a very strong leadership team and to build a very strong team. And take your time to hire the right people. Don't be in a rush to hire the wrong people, because they will really set you back on your plans. I have made a lot of mistakes in this entrepreneurial journey, and chief among them, I would say, was not firing people who were wrong for the business quickly enough. I eventually fired them, but not quickly enough. and the drain that can be on your money, on your time, and when you're building a business and when there are investor expectations, can turn out to be a very, very costly mistake eventually. So and finally, the point I really wanted to make is, um, don't build a business for investors or anybody. Build a business for customers. Build a profitable, scalable business model. Be very financially savvy. It's extremely important that you know your P&L, you know your balance sheet, you know your cash flows, because for a startup, unlike an established company, the money in the bank is the most ultimate and defining truth. As the money starts running low in your bank, people start taking decisions out of a sense of panic, and you don't have to operate like that. You can be very planned, you can be very much in control of your cash flows, be frugal, be mindful of where you're spending money, invest in the most important aspects of your business. But fundamentally, you have to be very strong on understanding business models and building a business model that can operate at scale and that can become profitable. And that is fundamentally beyond everything, beyond your idea, beyond your team, beyond you yourself. What eventually investors look for is the strength of your business model. And if there is no strength in the business model, then it becomes a challenge for being able to attract funding to run your company. And of course, that's very, very important. The business model, building a scalable, profitable business model is how I would put it. And you have to think about it right from day one. It's not something that you can say, okay, I'll think about it later. No. And lastly, what I really want to say is focus on your differentiation, focus on innovation. At all times, you have to build what investors call a moat. And in the old fashioned language, we used to call it a competitive advantage. And you have to be very clear about what is your competitive advantage. Why do you exist as a business? What pain point of your consumer are you trying to solve? Be it a B2B business or a B2C business, what is the differentiator that you bring to the market? So a competitive advantage, or moat as it is called, is extremely important for you to be able to build a scalable business in the future. So largely, I think these are the thoughts that I wanted to share from my own personal experience of building Melora and my entrepreneurial journey. And I think I have, yeah, I'm at 4:25. I'm happy to take any questions if there are any.
Thank you so much, Saroja. It's a very crisply put, that these questions are something that every entrepreneur would deal through in their journey of starting out and even much later. So thank you once again for that. I'll take up a few questions that we have. So Varsha asks, uh, you mentioned about, staying connected with the customers, listening to them. How does one build this connect with the customer? And is there a
Yeah,
strategy?
so
Yeah.
it really depends on what sort of a business you are. For example, I make it a point. So I have a system. I have a leadership review with my leadership team every Monday, and I've made it a practice that everybody needs to speak to 5 customers of ours before they enter the meeting, right? And this is something that Unilever does extremely well, and it's not something, like I said, you can delegate. Of course, our customer care teams are there, our frontline staff are there, they're interacting with customers day in and day out. But when you speak to customers yourself, or when your leadership team is speaking to customers, the perspective that you have, the learning that you are able to draw from what they are saying might be extremely different from somebody junior in your team. So how do you build customers connect? I mean, how do you build relationships, or how do you listen? Find any and all means. You can, of course, you can look at data. We are a digital company. We are an e-commerce company. So of course, we look at customer data. We have most sophisticated heat maps technology and all of that integrated into our website. So we know what the customer journey is like, and at what page who dropped out, what was the challenges that they had, what is the feedback. We have feedback mechanisms. So there are various institutionalized processes that you can have to listen to customers. But I'm saying go beyond that. Pick up the phone, talk to your customers, or meet them, better still. We have just started, we are an online jewelry company, but of course we have just started rolling out our stores. We opened our first store at the Orion Mall, and we are opening a lot more. And just what I do is I just go stand there and I just observe consumers. And if somebody has the time, I spend time talking to them. And it is so invaluable in getting the insights necessary for you to make the right decisions for your business. Because one thing that never works is ivory tower thinking. You may think you know it all, but a few conversations with your customers can tell you very clearly how you might be wrong in your thinking and in your approach. So have listening processes which are data based. There are various ways of putting in feedback that you can get if you're a large business from hundreds of thousands of customers. But beyond that, even a few conversations can be very, very insightful.
Right. I have a question. You spoke about traditional jewelry, that is being a dominant market. But then there's also artificial jewelry, which is coming at a lower price, which is not very traditional, has a little bit of a contemporary feel to it. Where would Melora fit in between these two, because you're using
Actually, let
a,
me
yeah,
get your question, Arnima. I think your question has the answer itself. You said in between the two, and that's perfectly the right way to describe Melora. We are not fashion jewelry. We are a fine jewelry company. We do make jewelry in gold, diamonds, gemstones, precious materials, but we bring in the fashion quotient of fashion jewelry. So, and at more affordable price points than the traditional jewelry, right? For example, our average ticket size would be one third of a traditional company like a Malabar, a Kalyan, or a Tanish, who are more in the wedding market. We are more in daily wear jewelry market. We are the only jewelry company in the world that takes global fashion trends for inspiration. Like I said, we are the czar of the jewelry industry. We launch a collection every week. It's unheard of. And all our designs are digital, whatever you see on our website or app. And I'd encourage all of you to check it out. It's all digital. And it's a no inventory model. Every single order is custom made. Every single order is 3D printed and delivered, which is what I meant by saying a differentiated business model. Right now, people can't think of having a jewelry company without inventory, but inventory is a huge drain on capital, right? And also, you have to start second guessing what a customer would like. We don't do that. We just make designs. We launch 75 designs every week. And every Friday, you come, you will see a new collection from Melora and 300 designs a month. And whatever a customer feels like, they place an order, and we are agnostic. We are not particular because we have not invested in inventory. So we are not looking out for our selfish interest of rotating the inventory. We are really truly looking at providing innovative designs to consumers. So think through the business model. It should be a scalable, profitable business model. And that is what we have set up in Melora from day one.
absolutely. That's wonderful, as you say about it. And I was just reading it somewhere to the audience who are listening. Melora has over 10,000 jewelry designs now, if I'm correct. And that's a commendable feat.
That's correct.
Um,
So
yes,
we launch designs every. But the beauty of the model is these are not real. We have not manufactured a prototype, a mold. It's not a wasteful way of manufacturing. It's a very digital age way of manufacturing where every design is just a digital design through the use of very sophisticated CAD and rendering software. So what you see on the website looks real, looks like a picture of a finished product, but we don't carry raw material inventory, semi finished goods, or even finished goods inventory. We only make to order. So only when a customer places an order we manufacture. So you have to think about the business model and how it can be an asset light and a capital efficient model, and that's why investors like to invest in Melora.
wonderful, wonderful. I've got a few questions. I'm going to club them together, and that's about starting out as a single founder. So, what were the challenges or the opportunities that you saw there, and how did you go about building a team? This over the years, identifying what's the right team. You know, how does it help?
Yeah, so I think there are advantages to being a single founder and disadvantages as well. I mean, many successful companies have more than one founder, but in my particular case, from day one, I have been a single founder. And I mean, it really depends on co-founder dynamics and co-founder relationships. I have known businesses where the co-founder dynamics and relationships broke down a few years into the journey, and then they had to part ways. They couldn't see eye to eye. And equally, some co-founder relationships have sustained for decades, and big businesses have been built. So there are all kinds of businesses, and I guess if you're a single founder, the advantages to it are that you can move fast. You're an independent decision maker. You're really not answerable to anybody but yourself, and so you can really be quick about decision making and move. The flip side of it is, of course, it's a much more lonely journey. Entrepreneurship, by the way, in itself is an extraordinarily lonely journey. However supportive your boss, your spouse is, however encouraging your investor is, nobody can truly understand what you're going through. Yeah, so it's a very, very tough journey, and being a single founder makes that process even harder, I would say. Right, so you have to it's very, very important that you're physically and mentally and emotionally fit, and that's the necessary investment you have to make in yourself, not just if you're a single founder, but even otherwise. Even if you have a co-founding team. So I make sure that I work out every day. I make sure that I meditate. I read up a lot. You have to, because it is a non-stop work. But you have to really think about your entrepreneurial journey not as a sprint, but a marathon. There will be ups and downs. There will be. You have to be prepared for the ups and downs. There will be years when it is really bad, right? But you have to not lose heart. It will pick up. And if you are physically fit and mentally, fit, and mental health is as important as physical health, but very largely ignored, unfortunately, in our country. You will be able to sustain the journey over long, long years.
Right, right, right. So you spoke about, in the initial journey, how you had to take a call between getting a high and paying job versus losing out on those financial aspects of, you know, building up. The question, where does profits come in when you're starting out? At what stage should one start thinking about it, right from the beginning? And is that how somebody should orient their business at, or does it come at a later stage, when you build a brand?
Sorry, I didn't get your question.
So what stage does somebody think about profit? Is it right
Oh,
from the beginning, or you think about it?
well, well, it really again depends on your business model, the financial model that you are setting up, and the kind of a business model that you're setting up. And it also depends on the growth potential of your idea. It depends on the size of the market for your idea, how big or small the market is for that idea. And if you have a very large vision, for example, we have a plan to get to $1 billion in revenue by FY26, then we are okay to forego profits in the beginning because we are making the necessary investments in the business. And we have decided that growth is more important right now than profit. But this may not be the answer for all businesses. So it's a difficult question to answer because every business model is different, every business opportunity is different, the scale and size of the market and the idea you're chasing is different. So you got to do what is right for you. In some cases, profit is very, being a profitable business right from day one might make sense, and sacrificing growth and building it more slowly. In other cases, if the market opportunity is large and you've got your investors on your side, you might want to make the necessary investments. But do remember, as an entrepreneur, and when you're raising external funding, every round of funding, you're diluting your own stake. That's the flip side of it, right? So if you're a profitable company, you don't have to raise too much money, and then you're not diluting your stake. But I have also seen many founders obsess unnecessarily about stake. So it really depends, right? You could have 80% of your company and 20% you've given to external investors when you raised money. But what is 80% of matters? What is the value of the business you're building, right? If 80% is of $100 million company, that's very different from even a 20% of a $1 billion company, right? So the percentage is less important than the value, the enterprise value of the business that you're building. So don't obsess about your stake, obsess about the opportunity that you've been given to build a business, and see what is the eventual value that you can build for your shareholders as well as for yourself.
Right. Okay, so we don't have much time now, but a few minutes left. I have a few questions. First is some tips and tricks that you can give on building successful brands. How does one look at it as a strategy?
It's a great question and the most difficult question to answer. I wish I there was a formula and I could pull it up and I could sell it and then I would be a multi-billionaire, you know, just by selling the formula of how to build a consumer brand. But I think it starts with having a consumer insight, and which starts with being very observant and connected to consumers at large, doing your consumer research not just at the start but frequently. I'll keep harping that point because I've cut my teeth at a wonderful company like Titan, and this is what I've learned from all the big leaders in the Tata group, that you have to constantly be in touch with consumers. So once you are in touch with consumers, you are able to spot an opportunity, you have the consumer insights on an ongoing basis. I think consumer brand building is that you have to focus on the core product. That's extremely important. Your product should be differentiated, the right pricing strategy, the right marketing strategy, positioning the brand in a way that is neither too aspirational nor too relatable. And again, you could be a mass brand, you could be a premium brand, you could be a luxury brand. It really depends on the kind of brand that you want to build. Making the necessary investments in marketing is very, very critical for a consumer brand. And so product, pricing, marketing, the distribution channels, the classical 4 Ps, I would say. You have to focus, but at the end of the day, consumer brand building is about a most important thing, which is being very detail oriented. You have to control the way the brand is manifesting to the customers. For example, it might surprise you, as you said rightly, Arunima, we have over 10,700 designs in Melora, which is the largest range that any jewelry company offers in India. But even today, every single design that goes on the website is personally approved by me. Yeah. Every single homepage banner, every single visual, every single ad, everything I take an interest in approving. The carpet at the store to the lighting at the store, I'm personally involved in approving because every little thing is a manifestation of the brand. And the way the consumer brand is clear in the head of a founder, it's very hard to translate it to your team. And over time they learn what is the kind of a brand that you want to build. So the brand is the personality of the founder, so it's very, very important that you put your DNA, you breathe your soul into every single aspect of the consumer brand.
Right, right, right. You spoke about, how the stores of Melora have a certain aesthetic and a certain experience. But now we see there's a shift that's happening in e-commerce, especially during the COVID times. Where do you see the future of jewelry in general? Is it going to be more online? Is it going to be more offline? How do you translate that experience of a store into an online experience?
Yeah, actually, we've done it the other way around. We started with being an online company, and now we are entering the physical retail world. And consumer feedback has told us that we are quite seamless in our online offline. I think fundamentally, it's not about whether you're an online or an offline company. I envision for all companies, not just jewelry or fashion companies, but for all companies, digital is going to play a very critical role, especially in the post-COVID world. I was joking in another panel where I was speaking recently for the retail, CII retail panel the other day, that COVID has appointed itself the chief digital officer of every organization in the world. And those that did not embrace technology are being forced to do so. So there are no boundaries anymore. There is complete convergence. We will see hybrid models emerge where consumers are very comfortable online, offline. Look, the phone is an extension of your arm, right? I think vast majority of our waking hours are spent on our phone. We live as much in the virtual world as we do in the real world. And true brands, really will try to navigate between the online and the offline worlds very, very seamlessly, exactly as consumers are doing. So I see digital play an extremely important role for all businesses going forward.
Right, right, right. You worked with Tanishq, you've also had an experience working with Dell. How does that corporate experience integrate into when you're starting out, a venture of your own? And do you suggest that it's a must for all entrepreneurs to start out, or?
Not at all. Not at all. I don't say that you have to have a lot of work experience before you start entrepreneurial journey, but I will certainly say that it has helped me. And like I said, I've learned a lot about building profitable businesses. I've learned about working with people, carrying them together to a common goal, hiring, firing, so many people decisions, so many financial decisions, so many marketing decisions. I have learned a lot about building a business thanks to my work experience. How has it prepared me? Actually, peculiarly, I would say corporate experience has been a benefit. In some cases, actually, it has been a disadvantage to have had experience in the sense that I've had to unlearn a lot. For example, speed of decision making. Corporates become very bureaucratic after a particular time, and failure is not celebrated. In startups, we encourage failure. We call it experiment. I'm all for my team launching experiments, and proving that out. And if you are not innovating, if you're not experimenting, if you're not piloting, then you're not really going to be an innovative company. So some advantages and some disadvantages, but you have to learn, unlearn very quickly some of the experiences from the work background, which might come in the way of your entrepreneurial journey.
Right, right, right. Okay, Krishnan asks about you talking about, not looking for competition. But at the same time, when we talk about competitive advantage of a brand, you need to understand what are the other players down there, and what is the edge that your brand would have over the other. How does one go about, look balancing somewhere between both these approaches?
Yeah. So when I say don't look at your competition, I don't mean that don't look at them at all. But what I meant to say is don't obsess about them. I have seen many consumer companies obsess about competition to the extent that they fail to recognize consumer needs. Right. So on the balance, you've got to have your eye more on your customer and their needs, because you are assuming by looking at your competition that they have done their homework in understanding consumer needs, right? And now you're either trying to copy or follow or whatever it is that you're trying to do. So keep an eye on competition, but keep a very loose eye on competition. Keep a much more firm eye on your consumer, and you will never go wrong.
Right, right, right. So with that, Saroja, we'd come to a close of this session. Uh,
Thank you.
I
Yeah.
just think, I was just thinking in my mind that if we can have this as a, ready manual for entrepreneurs who are starting out, and there are
I
few,
will.
yeah, please go ahead.
No,
So,
no, go ahead. Please complete your
yeah,
thought.
so there are few questions that can't take up due to paucity of time. So we'll have them send over to you, and you can always share your
Absolutely.
thoughts
I'm
on
happy
that.
to answer. Look, I'm always very happy to share my experiences in the hope and belief that, somewhere a budding entrepreneur will draw inspiration from my journey, which was, very, very encouraging journey I've had. And, you never know. So I really believe in giving my time and whenever it is asked of me. And I'm always happy to serve the community at large. And I really truly believe that India needs so many more entrepreneurs. So many more entrepreneurs. We need to build world class companies. And I wish everybody listening onto this call all the very best in their entrepreneurial journey. And of course, I'm always available for any advice or assistance. Thank you so much for having me, Arunima, and nice organization. It's been a real pleasure speaking to all of you today.
Thank you so much. And to the audience where the thank you and the comments are pouring in. So I'm just expressing gratitude on behalf of everybody who's attended this call.